Hey, welcome investors to the 40 Finance channel. My name is Jeff Beers. Today I'm going to be talking about the stocks that I'm buying here in August. Going to take a look at the prices I paid and where my cost basis sits across the board for each one of these plays. Quick disclosure, my stock picks and projections are just my opinion for your entertainment. Please talk to a financial professional before taking on the risks of the stock market. But if you understand all the risks and you like to watch stock market content, analysis, going deep on stocks, then please subscribe to the channel. Thank you to everybody who has supported the channel so far. All right, I've had a little bit of fun in August. I've added a few new positions, actually, totally new positions to my portfolio, starting with Rocket Companies. Rocket Companies was an IPO here in August. They are better known as Quicken Loans, Rocket Mortgages. I am an actual consumer of Quicken Loans and have had a fantastic experience. Can't say enough about the sort of digitization of the mortgage process that Quicken has done, and it makes things very easy as a customer, not only to figure out where you stand, but also entertain ideas about refinancing, what could I sell my house for, all those things. And the customer support, which of course they're known well for, has always been there if I had a question. So I had always told myself over the past several years that if Rocket ever went live, that I would definitely buy in due to my experience. That day sort of came. I just happened to see a headline that their IPO went live, and I was worried because I don't think I read it until like 1 or 2 in the afternoon. I was like, oh, well, that probably already ran up. But it's staying pretty steady right now. So let's take a look at exactly what I did. All right, Rocket Companies today, ticker symbol RKT, sits at $18.96. I believe the IPO came out at 18 maybe, and then slowly started to progress upwards. You can see on the chart on the right-hand side, it's been as high as 24.67. I sort of noodled in 3 different places this month. You can see at the top, I bought at 1938, 2098, and 1980. That puts my current cost basis across all shares of $20.05. So technically losing a little bit of money right now, but I can assure you that is really the least of my concerns with this company. In fact, if it were to go down, let's just say under 18 for any reason, I would likely pick up more shares there. But for now, I'm going to stick with the lots that I have and my cost basis of $20.05. All right, after each stock I go through today, we got 4 total. I'm going to give a little rationale about why I chose August 2020 to jump in and make a purchase for each one of these. For Rocket, I kind of shared it already. That one was on my radar of something that I really liked the company and my experience with them, so I probably would have bought anyway. However, not long after my shares were in, this headline came out on Friday. Quicken Loans parent Rocket Companies soar 10% pre-market after company offers Q2 guidance. So with it being an IPO, they had to come out and share some preliminary information on their first public quarter. And long story short, from a year-over-year perspective, I mean, they crushed it. And I highlighted a couple of things here. If you look at the first yellow line in the middle, Rocket said it expects net income of $3.5 billion after a loss of $54 million in the same period a year ago. Revenue is expected to climb to $5 billion from $938 million a year ago. And then quickly at the bottom, the company said its closed loan originations volume of $72 billion was up 126% from a year ago. These are exactly the kind of numbers you want to see if you're going to take a gamble on an IPO. And from my standpoint, thinking ahead to the mortgage market, we basically already received a sort of promise from the Fed that interest rates are not going to go up either at all or very minimal increases through the next 3 years, which means this mortgage business is a good place to be. As an investor in Rocket, I will certainly be paying attention to the Fed a lot more. Not worried about them in the short term, but somewhere in the next 2 to 3 years, we're going to have to pay attention and make sure they don't shift things up on us, because that would start to lead to negative comps for Rocket. Could affect the share price, but over the next 1 or 2 years, man, I think this one could do some great things. And if you have any interest in a stock like this, you can basically go out and get it for its IPO price, even if you totally missed the boat on it, sort of like I did. All right, next stock on the board is an existing holding that I added to, and that is DraftKings. DraftKings price right now of $33.91. I've bought several lots of DraftKings over the past 60-some days. This was an IPO for this year as well. I bought one lot in August of $31.82. My current cost basis sits at $34.56. So once again, I'm off the mark by a couple dollars. And once again, I could really care less here in the short term. You can see on the chart to the right, that's a 1-month chart. DraftKings has a ton of volatility right now. Ton of volatility, namely because every time you turn on the news, there's a new announcement about sports, right? Sports are happening, sports are canceling, what's playing, COVID this, blah, blah, blah. And so depending on how you play the news, you can keep lowering your cost basis. I think mine heading into August was, just past 35, something like that, and I was able to pick off a day at 31.82 and bring that down a little bit. All right, so thinking about why I bought in August. Well, there's two things. One is I knew that DraftKings had an earnings report coming. There was a side of me that thought that earnings report would be positive, but at the end of the day, it was actually not super positive in terms of year-over-year comps. However, when I started to think about it more as I read through the earnings, this quarter that they're reporting on did not include a lot of the sports coming back yet. So if you think about MLB, NBA, those are the things that really turn the needle for a company like DraftKings, and we had not even gotten in to NBA or MLB seasons yet. So frankly, I'm not super surprised that they negative comped, and this is a company from an investing standpoint that I know I'm going to have to hold well through the NFL season of next year to get a true beat on the performance, and I would likely be best to hang on through at least the 2022 NFL season as they bring more states online for gaming. Looking at the headline, the top box there just says, basically the company posted a bigger than expected loss for second quarter, but their sales topped the estimates. They just dropped on the bottom line. If you go down to the bottom though, this is sort of the look ahead. This positive momentum has accelerated with the return of MLB, NBA, WNBA, and NHL. DraftKings is now expecting pro forma revenue of $500 million to $540 for fiscal 2020. That's equal to a growth of 22%. All right, so great. Even in this crap year, they still have the opportunity to grow 22%. Really, what else can you ask for? All I really need for this one from a safety perspective, I just need the NFL to play football, right? I need the NBA to somehow finish their season, which they seem on track. MLB, I don't know. It seems hit or miss with them. So I'm going to just assume their season gets canceled. But if NBA sticks on, NFL happens, I think it's nothing but great news for the rest of the year for DraftKings. The real win, though, if you're an investor, is to get in now if you think the price is low. And hopefully you're going to be in that $50, $60 range by Christmas time of 2021 as more states come online with gambling. All right, next stock on the board, PayPal. And PayPal is a brand new position for me. Most folks know that I hold Visa and not only in very high regard, but Visa is my #1 position in my portfolio. And I'm looking to build out PayPal over the next year or so to a similar weight in my portfolio. You see the stock price today at $191.46. I bought in at $192.61. Also caught another minor dip at $190.48. My current cost basis is $191.45. See the chart on the right? I should have made this move earlier with PayPal. It was on my list. It was something I was intrigued on, but I did miss their latest quarterly earnings, which showed just spectacular growth. Spectacular growth, mostly due to e-com and COVID type things. And you see the jump that we went from whatever it was, 175, upwards to 190. It then actually crossed over the 200 mark into 204. I wasn't super interested then, but it came back down to earth a little bit, not by a lot, but you can see I bought in at 192 and 190, so I played that back hill slide, so to speak, and it's staying kind of stagnant right now, which is just fine with me. So at the end of the day with PayPal, it was an interesting move by myself because I typically try to buy dips, and while there was a small dip in there from 204, that's really a stock with PayPal that I would have figured for myself I would have waited a little bit longer for maybe a market correction. But the thing burning in my brain, to be honest, as a Visa shareholder, was that Visa really got hit on the travel niche and business expense side of spending, consumer spending. And when I was going through the PayPal report, and they didn't have any of that, probably because people don't use PayPal to buy travel, and they probably use it even less to go out to dinner as a business, etc. And I started to think to myself during that time, when I was comparing those two earnings reports, I'm like, hey, there's something here with PayPal, as I'm really big on this new payment and digital currency world, but I see that I have some risk on Visa until travel gets back together, and perhaps business too, but PayPal's not having those same issues. That's when I decided I want in on PayPal. I'm too big on digital payments. I believe too much in the changing of the currency landscape, not necessarily from a Bitcoin perspective, so to speak, but how people pay each other, how people buy things. The days of the old wallet, as we all know, are going away, and the new days of Venmo this and transfer that, that's all happening right now, and it was accelerated with COVID. So that's why I jumped into PayPal, even though the price was probably a little higher than I cared to see. The other thing that pushed me over the edge here on PayPal, as you take a look at the analyst ratings from Tip Ranks, gee whiz, even after their earnings report, you still have buy across the board. Everyone calling plus 10 to plus 20. So there's still money to be had here. Not that I doubted that, but it's good to see that the analysts aren't calling this the peak. All right, last stock that I added in August is another new position. 3 new positions in a month, very unlike me. I'm usually adding an adjusting cost basis. I'm kind of buying into the second wave of the economy and figuring out hey, what chips are left on the table, who's really performing well, and who looks good for the long term, so that even if I do buy a little higher, I still have the opportunity to make money in the long term. And long term is exactly what I'm looking at with this company, Taiwan Semiconductor Manufacturing Company Limited. What a name. Ticker symbol TSM. Stock price today at $78.41. And you can see I only bought one lot of this one, $78.63. The chart on the right tells it all. Yet again, like PayPal, I missed a huge surge. Okay, missed a huge surge. Most of that surge coming on speculation that Intel would eventually partner with them. But this is one from a business standpoint where this company I just can't see it going away, and I see it having no shortage of customers in their landscape. So I'm really excited. And as a bonus, I didn't highlight it, but you can see it in the middle column near the bottom. Forward dividend, 3.64% at today's price. If the worst thing I do is hold this stock at par for 3 or 4 years, I'm still getting a better percentage than your average savings account. All right, so the idea for TSM was simple. I did this video on them a few days ago. You can look it up in the archives. And frankly, whenever I do these, I'm sharing my opinions with you guys, but I'm doing stock research anyway. I'm picking companies that I like to look at. As much as it's for you and growing the channel, a lot of it is work that I'm just naturally doing behind the scenes as sort of a stock market hobbyist, so to speak. You might remember I did that Intel take 2 or 3 weeks ago, and somewhere in that Intel take, TSM kept coming up in all the news articles and things that I was reading. So I decided to jump into TSM's world. When I started studying them, I didn't even realize how big they were till I jumped in, and I did this video. I learned a lot about them, and walking away from it, I was like, holy cow, I don't really like to buy foreign stocks because I'm always nervous that a foreign market could collapse or something. But from a chip sector standpoint, I have very little exposure. This company does business with multiple chip providers. I just like the safety of it. I like the dividend and the amount of pride and the amount of growth that this company does at their size. It's a relatively easy story to get behind, quite frankly. So I enjoyed researching them, and when I walked away, I'm like, this is one I want to own. It wasn't on the dartboard. I just missed a huge run up. Everything about this says not yet, not yet, but I don't care. I actually don't care. I think chip sector is going a million miles an hour, and I think if I have to buy some dips along the way to lower my cost basis, happy to do that with this company. All right, guys, so there you have it, the stocks I was buying in August. Let me know what you think in the comments, and as always, if you can give me a like and subscribe, really helps the channel. Appreciate everybody's support. I'll see you on the next video.